Hello friends, hope you're doing good. Welcome back to my channel. Please like, subscribe, and also press the bell icon. Today's video is about one of the paper industry company called PUDUMJEE Paper Products Limited. So why did I choose this company? First, I will let you know briefly. First thing is ROE, return on equity, is really good, 20%, and ROCE, return on capital employed, that's also really good, and promoter holding, so that is 71%, that is also really good, and debt to equity ratio, that means there is no debt actually in this company, it's somewhat negligible, and cash rich company, you can reserve we can see 537 crores is there. So they've invested a lot of money also in the mutual fund and other things as well. Apart from this, if you see number of shares, this is also less. Sales growth is also good actually in this. So just I want to give you this video, uh, this company to suggest for you for a long term. As always, I am a long term investor. So and also it is kind of rightly valued, PE of 10. So based on whether it is uh, it's this company will become a specialized packaging business or based on it is a commodity business, because actually management is saying they are moving towards the specialized packaging solution company. So if that is the case, I think this PE rating has to be re-rated. If you see PE is actually is 10, if you see they're almost doing a uh, EPS, earning per share of 13.3. So even if it expands 20, the share price should become double actually from here. So 143, I think it should become 280 or something like that. Yeah. But anyway, just to give you an overview, what this company do. So they are actually mainly, I can see here, the paper packaging, this kind of specialized packaging they will do, and also this, napkins, kitchen napkins as well as toilet napkins as well, and books and other things as well they make. Apart from this, they're also making specialized product, as you can see here, this kind of packaging items they're making. So in terms of business, I think they're exporting to all these countries, Australia, Africa, and all these countries as well. Just to come back, I mean, you can also see the description here, what kind of business is there. So as you can see, tissues, as I said, this decoration grades papers, food grades, bake oven paper, grease proof, slip easy, and all this, food grade and pharma, specific to pharma grade uh, paper, Bible printing, I'm not sure, medical paper and all this thing doing. They're also producing this super calendar grades, specialty grades, and security paper, and writing and printing grades. So these are all the product range what they are making. The company is actually cash rich company. So if I quickly come down in terms of performance, I think December onwards, I think the price is almost like stable from 127 to 141. It is given a breakout with a huge volume now. And also the last quarter result was good. As you can see, the pros, I think everything is good here. If I quickly come to the sales wise, so here, as you can see, it's keep on increasing actually. September quarter they have did 222 crores, and this is the expenses, and 38 crores they got profit. And if you see the margin here, I think so they had reached a 24% margin some time back, and now it is little bit coming down. I think that's what this is the main monitorable actually. Uh, Apart from that, anyway, sales is growing. I think if you see in 2016 they had made a 469 crores. So now it is 834 crores sales they have done. And yeah, cash rich company. In terms of promoter wise, also I think the promoters is also good, and the debtor days is also less actually. Inventory days is little bit high. That means they're keeping the inventory for long term, long time. I think this is one of the monitorables. If they want to keep the inventory for a long time, that means they're not able to sell quickly. And at least even in terms of payables, payment terms is also actually a little bit on a higher side. So promoter holding is good. They've also accumulated some shares as well. So now it is become 71.31. Uh, yeah, just to give you my last, what is the management say from, I actually picked up this one from, the annual report. Let me make this one bigger so that you'll be able to read it better, I guess. So I think first one, what the company is saying is the company continue to focus on the niche, complex, and upper end of the packaging segment. As you can see, this is actually being recalled by a larger number of customers around the world, specialized and solutions. I think they are getting into these kind of specialized solutions. That's why also their actually performance was good last year. Second one, the company continue to advise, co-develop, and produce specialized paper used across brand critical applications like hygiene in foods, health in pharmaceuticals, and protection in consumer products. The result is that an increased number of customers came to us not seeking, another 1,000 tons of any paper. Instead of that, actually, the grade of paper customized around specific needs. I think whatever the orders they're making, it's specific to customized, make to other kind of orders what they're getting. So this is also, I think, as per the management, I think this is moving towards specialized product. I think that was one good thing. And third point, what the company is saying is the company continue to play the uncommodity game. I think this is very very important. If it is commodity game, means if the pulp of the paper, if it goes up or down, I think their margins will also fluctuate like that. I think then it will become a cyclical business. So this is very very important. Management themselves are saying that they are moving to specialized company. If it is specialized company and if it is a leader in that segment, then definitely PE rating, re-rating will happen. It can minimum, the big companies will trade at minimum of a 20 PE. If that is the case, I think it should double from here. And fourth one, also the company increased the service components of solution-based delivery, which translated into realization that was considered higher than the paper industry average and repeat engagements with the same customers. I think this is also repetitive orders they're getting. And fifth point is actually they've got power of cash. I think they, as I showed you, I think 587 crores reserves is there. If the company is just 1,500 market cap. So if that is the case, I think this is actually kind of a very good company which is available at a reasonable price. And only the key risk what you have to monitor is actually you need to monitor the margin. What is the OPM? Uh, Operating profit margin what they are giving. I think if it is come down below less than 15%. If I come back quickly here, I think some of the years, I think earlier it has got a less margin. uh, if I see the yearly ones, so you can see here, I think some of the years the margins were very less, 8%, 6%, and 9%, which actually keep on increased, and it is now at 20%. So as per the management's saying that it is becoming specialization. If that is the case, at least it should have a continue to have a margin of 15% and more. If that is the case, I think that this can get a re-rating. This you need to monitor, and also you need to check. I think minimum sales growth of 10% it should be there. I think as this is small cap company, don't invest more than 5%. I don't recommend that. And also wait for correction. I mean, if the correction happens, then you can accumulate for a long period of time. So if the monitorables are good, I think this company is really good. I think the cash rich company, promoter holding is good, and debt is zero, ROC is good, and also it's very micro cap company. Just it has got a share total shares of 9.49. I think this is kind of a good company where you can keep on investing for a long period of time. Just to come back on the 10 years performance, as you can see, I think even in 2020 also it was 14. It has almost become 10 bagger from here. But in terms of price to earnings ratio expansion, I think this is almost going around 11 to, yeah, 5.89 like that. I think even industry PE is also 10.5. I think that is rightly valued. Unless otherwise this company, becomes like a specialized business, I think this will continue to, get a PE of around 10 like that. So sales and margin, as I said, actually it is going around on the same region. Yeah, we need to monitor this actually, this operating profit margin. So if it, whether it's cyclical or not, that it will determines actually. So I hope this video helped you to pick up this company. I think, as I said, only pick up less than 5% of your portfolio and monitor for some or few three another few quarters. So if it is definitely specialized paper segment, as you can see, they are also saying specialized paper segment here, then it can get a re-rating, as well as the sales is growing, the EPS will expand, then definitely you can make a money of CAGR of 15-20% you can easily make. As you can see here, stock price also in 5 years it is given 55%. That's a good returns. Even in 3 years, if you see 53% it is given. Yeah, return on equity also 16%. I hope this video helps you. Please subscribe and support. Thanks for now. Bye.